Hey there, future millionaires! Ever wonder what separates the rich from everyone else? It's not always about working harder or even getting lucky. While those things can help, the real secret often lies in the assets they own. You see, most people trade their time for money, working a job for a paycheck. But the wealthy understand that true financial freedom comes from having your money work for you. That's where assets come in. So, in this video, we're diving deep into the top 10 assets that consistently make people rich. We'll break down exactly how these assets work, why they're so powerful, and how you can start building your own wealth-generating portfolio. By the end of this video, you'll have a clear roadmap to start creating your own path to financial freedom. Let's get into it. First up, we have real estate, one of the oldest and most reliable wealth-building assets out there. For generations, people have been using real estate to build wealth, and for good reason. One of the best things about real estate is its versatility. There are so many ways to make money from it. You can generate passive income through rental properties, benefit from property appreciation as values rise over time, or even flip houses for a profit. Take the example of a duplex. You could live in one unit and rent out the other. The rent you collect from your tenant could cover a significant portion, if not all, of your mortgage payment. This means you're essentially living rent-free while building equity in a valuable asset. And as if that wasn't enough, real estate also acts as a hedge against inflation. As the cost of living goes up, so do property values and rents, helping you stay ahead of the curve. Stocks represent ownership in publicly traded companies. Buying a stock means owning a piece of that company. Shareholders benefit from the company's success. Make money through dividends and capital gains. Dividends are a share of the company's profits. Capital gains are profits from selling stocks. The stock market can be volatile. Historically, it trends upwards, building wealth. One of the best ways to get started with stock market investing is to invest in what you know. Think about the products and services you use and love on a daily basis. Chances are, many of those companies are publicly traded, meaning you can buy their stock. For example, let's say you're a big fan of Apple products. You use an iPhone, a MacBook, maybe even AirPods. You believe in the company's future and their ability to continue innovating and creating great products. Well, you can actually participate in their success by investing in Apple stock. Alternatively, you could use the momentum investing strategy to pick individual stocks to invest in. Momentum investing is a strategy where investors buy stocks that have shown strong recent performance, with the expectation that their upward trend will continue. It's based on the principle that winners keep winning in the short to medium term. An investor could allocate funds equally across the top 10 stocks in the S&P, but it's essential to monitor regularly and be prepared for volatility, as trends can reverse quickly. The key here is to do your research. Look into the company's financials, their management team, and their overall industry outlook. Number 3 on our list is businesses. Starting or buying a business can lead to massive wealth. Entrepreneurs find a need in the market and fill it, scaling their product to a money-making machine. Think about it. You start with a lemonade stand, then you open a lemonade shop, and before you know it, you're franchising lemonade stands across the country. That's the power of building a business. Before you quit your job and pour your savings into a business, let's be real. Starting a business is not for the faint of heart. It takes guts, determination, and hustle. Long hours, rejection, and stress are part of the journey. But the rewards can far outweigh the risks. You're in control of your destiny. The financial upside is limitless. No salary cap when you're the boss. Find something you're passionate about. Passion fuels you through tough times. If you can weather the storm, the rewards can be life-changing. So, if you're ready to work hard, starting a business might be your ticket to wealth. Just remember, it's not a get-rich-quick scheme. It takes time, dedication, and hustle. Number 4 is intellectual property and leveraging your creativity to build wealth. This includes things like writing a book or composing a song. Protect your ideas and generate passive income through books, music, patents, trademarks, and copyrights. Create once, earn repeatedly. It's like planting a money tree. Now I know what you're thinking. I'm not exactly J.K. Rowling. I don't have a magical world hidden inside my head. And you know what? That's totally fine. You don't need to be a literary genius to profit from intellectual property. There are countless ways to monetize your knowledge and creativity. Let's say you're an expert in digital marketing. You could write an ebook, create an online course, or even start a consulting business, sharing your expertise with others and getting paid for it. The key is to identify your unique skills and passions and find a way to package them into a product or service that people are willing to pay for. And remember, the internet has made it easier than ever to reach a global audience. You could be sitting at home in your pajamas, selling your ebook to someone on the other side of the world. So, don't underestimate the power of your own creativity and knowledge. Intellectual property is a valuable asset that can help you build long-term wealth, and the best part is, the possibilities are limitless. At number 5, we have high-value collectibles for history buffs and treasure hunters. These rare items, like vintage cars and antique furniture, are investments. They hold and often increase in value over time due to their scarcity. Take classic cars, for example. A 1960s Ferrari can now be worth millions. Now, before you go running off to the nearest auction house, let's be clear. Investing in high-value collectibles isn't as simple as picking out something that looks cool. It requires research, knowledge, and a keen eye for value. You need to understand the market, know what factors drive value, and be able to spot a good deal when you see one. It's also important to buy from reputable sources, get items authenticated if necessary, and make sure you're properly insuring your collection. But don't let that discourage you. The world of collectibles is vast and exciting. It's a chance to own a piece of history, something tangible and unique, and potentially watch its value grow over time. Whether it's a first edition comic book, a rare baseball card, or a vintage Rolex watch, high-value collectibles can be a rewarding investment, both financially and personally. Just remember, knowledge is key. Do your research, buy smart, and who knows, you might just uncover a hidden treasure. All right, let's talk about cryptocurrency. Now, you've probably heard stories of people getting rich quick off Bitcoin or Ethereum. And while those stories can be true, it's important to remember that this is a volatile market. Just like you wouldn't dump your entire life savings into a single stock, you shouldn't go all in on any cryptocurrency without understanding the risks. Bitcoin is still considered speculative by many financial experts and investors because of price volatility and uncertain future adoption. While Bitcoin is gaining mainstream adoption, there's still uncertainty about its role in the global financial system. Some countries embrace it as legal tender, like El Salvador, while others ban or regulate it heavily. Bitcoin also lacks intrinsic value. Unlike traditional assets like real estate, stocks, or bonds, Bitcoin doesn't produce income, for example, rent, dividends, or interest. Its value depends on supply, demand, and market belief like gold does. Despite the risks, Bitcoin has matured in recent years as institutional investors, banks, and corporations now hold Bitcoin as part of their portfolios. It is often referred to as digital gold due to its fixed supply, 21 million coins. Investors should approach it with caution. If this is going to be part of your portfolio, it should account for a smaller percentage of your diversified portfolio. Now, I'm not saying you should stay away from cryptocurrency altogether. In fact, I think it's important to at least understand how it works because it's likely to play a significant role in the future of finance. But before you invest a single dollar, do your research. Understand the technology, the risks, and the specific cryptocurrencies you're interested in. Don't just blindly follow the hype or listen to someone promising you'll get rich quick. There are plenty of scams out there in the crypto world, so be careful. Start small, diversify your investments, and never invest more than you can afford to lose. Remember, knowledge is power, especially when it comes to something as volatile as cryptocurrency. Investing in yourself by learning about blockchain technology, different crypto projects, and risk management strategies can potentially pay off more than just throwing money at the latest meme coin. Remember, this is your financial future we're talking about, so tread carefully and make informed decisions. Let's talk about real estate, but with a twist. Not everyone wants to be a landlord or flip houses. That's where REITs, or real estate investment trusts, come in. Invest in real estate without owning property. Buy shares in companies managing income-producing real estate. Own a piece of hundreds of properties. REITs distribute at least 90% of their income as dividends. Enjoy a steady stream of passive income. REITs are traded on stock exchanges, making them highly liquid. Buy and sell them easily, unlike physical real estate. Another great thing about REITs is that they can provide diversification to your investment portfolio. If you're heavily invested in stocks or bonds, adding REITs can help reduce your overall risk. Remember, diversification is key to building a resilient portfolio that can weather market downturns. And since REITs are tied to the real estate market, They don't always move in the same direction as the stock market, providing a hedge against volatility. Now, there are different types of REITs, each focusing on different sectors of the real estate market. You've got your retail REITs that invest in shopping malls, residential REITs that own apartment buildings, and even healthcare REITs that invest in hospitals and senior living facilities. So depending on your investment goals and risk tolerance, you can choose REITs that align with your overall strategy. Just like any investment, it's crucial to do your research. Understand the specific REIT you're investing in, and make sure it fits into your long-term financial plan. Let's talk about one of my favorite investment vehicles, index funds. Boring can be beautiful when it comes to building wealth. Index funds are low maintenance and track a specific market index. This diversification minimizes risk and keeps costs low. Index funds are investment vehicles that aim to replicate the performance of a specific market index. The S&P 500 index funds track the S&P 500 index, which includes the 500 largest publicly traded companies in the U.S. Total stock market index funds track the entire U.S. stock market. You could also opt for international markets, bonds, or specific sectors. There's an index fund to meet your needs. Popular providers like Vanguard, Fidelity, Schwab, and iShares offer a wide range of options for investors. Simply visit their websites. Target date index funds, also called target retirement funds or life cycle funds, are a type of mutual fund designed to simplify investing for retirement or long-term financial goals. Target date index funds invest in a diversified mix of stocks, bonds, and sometimes other asset classes. The target date in the name refers to the year you plan to retire or need the money, for example, 2050. The fund starts with a higher allocation to stocks early on, and more stocks equals higher risk but higher returns and growth potential. As the target year approaches, it gradually shifts to bonds and cash to reduce risk and preserve capital. An example of this is Vanguard Target Retirement 2050 Fund. Now, I know some people think they can beat the market by picking individual stocks or timing the market perfectly. But let me tell you, even professional investors struggle to do that consistently. In fact, studies have shown that index funds outperform actively managed funds over the long term. So, if you're looking for a simple, low-cost, and effective way to invest your money, look no further than index funds. They're perfect for beginners who are just starting out, but they're also great for seasoned investors who want to simplify their portfolios and minimize fees. Remember, when it comes to investing, time in the market beats timing the market. By consistently investing in index funds over the long term, you're giving your money the opportunity to grow and compound, potentially leading to significant wealth down the road. And trust me, there's nothing boring about that. Building wealth takes time, discipline, and a solid investment strategy, and index funds can be a cornerstone of that strategy. Now let's talk about the most important asset you can own, yourself. Yeah, you heard that right. Investing in your education and skills is like investing in a high-growth stock that pays dividends for life. Think about it. The more you learn, the more valuable you become to employers, clients, or even if you're running your own business. It's all about increasing your earning potential. Whether it's getting a college degree, learning a trade, or mastering a high-demand skill like coding or digital marketing, the return on investment can be huge. Remember, knowledge is power, and in today's economy, it's also a direct path to building wealth. So invest in yourself. It's an investment that never stops paying off. All right, have you ever wanted to be the bank and lend money to people or businesses? Well, with peer-to-peer lending platforms like Lending Club or Prosper, you actually can. It's like cutting out the middleman and connecting directly with borrowers, allowing you to earn interest on your money. This can be a great way to generate passive income, especially if you're not a fan of the volatility of the stock market. Now, keep in mind there's always some risk involved with any investment, and peer-to-peer lending is no exception. You need to carefully research borrowers and understand the platform's terms and conditions. But if you're comfortable with a bit of risk and want to diversify your investment portfolio, peer-to-peer lending can be an interesting option to explore. And there you have it. From real estate to stocks, businesses to your own education, these are the assets that can pave your way to financial freedom. Remember, building wealth is a marathon, not a sprint. Start small, stay consistent, and focus on building a portfolio of income-generating assets. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more wealth building tips. Now go out there and start building your financial empire. See you next time.